Hello traders, welcome back to the Forex Gig where we dive deep into the tool that can help you make smarter trading decisions. And in today's video, we're going to be talking about the simple breakout strategy. And this is a method that can help you identify when price moves beyond established barriers. So why not stay with me until the end of this video to learn how to spot high probability breakout opportunities, avoid false signals, and implement a complete trading approach that helps and works across all time frames. We start by understanding the simple breakout strategy. And the breakout occurs when price moves outside a defined support and resistance level with an increased volume, signaling the potential start of a new trend. Now, this price movement represents a critical moment when the market breaks through an established barrier that has previously contained trading activity. Now, the core concept behind this breakout trading is straightforward. We identify key levels where the market has historical paused and reversed. Then we look for moments when price decisively moves beyond this barrier. Now, these barriers typically forms are horizontal support and resistance level, psychological trend lines, chart patterns, or psychological points. So if I'm to draw a box here, because the market has been moving sideways at this area, you can see this is a range bound market where price is moving up and down within the range. We can expect a breakout in this trade. Breakout works because they represent a fundamental shift in the market psychology. When price breaks through a level that has previously held firm, it indicates that buyers have overwhelmed sellers, or sellers have overwhelmed the buyers during the breakout. This shift in power often leads to continuation as more traders recognize the breakout and join the emerging trend. Not all breakouts are created equal. The most reliable breakouts are recognized the most reliable breakouts are recognized when they are joining through the trend. Now, first, they occur after multiple touches of support and resistance level. As you can see in this area, you can see multiple touches of the resistance region and multiple touches of support region. Secondly, they show an increased volume. You can see at the breakout region, we can see an increased volume at this area when price broke out. They are being accompanied by an increased volume in the chart. You can see from our volume indicator, there was an increase in the volume at this area. The third step is that they often follow a period of decreasing volatility or consolidation. And as you can see at this area, it followed an area of decreasing volume or volatility before an increase in the volume. Now, the time period of consolidation before the breakout matters significantly. As a general rule, the longer a market consolidates, the more volatile and significant the resulting breakout will be. Now, this happens because energy builds up during a consolidation period, similar to pressure building in a volcano before it erupts. So there are two types of breakouts you should recognize. First is the continuation breakout and the reversal breakout. And this is a typical example of a continuation breakout because market was trending to the upside when it paused, consolidated before it broke out to the upside. While the reversal breakout happens when price breaks in the opposite direction of the trend. And as we can see in this area, after our consolidation moved to the upside, there was a little bit of consolidation in this area in the market before price decided to break out from the downside. It broke out and retested and continued to the downside. So false breakout represents primary risks when trading this strategy. This occurs when price briefly moves beyond a support or resistance level but quickly reverse. So to avoid these traps, successful breakout traders wait for confirmation signals such as a full candle close beyond the level, an increased volume during the breakout, or additional technical confirmations from indicators. Now let's see how we can apply this simple breakout strategy to our day-to-day trading style. We implement the simple breakout strategy. You require a systematic approach to identify and confirm and execute trades with precision. This trading method focuses on catching price movements when they break through established support or resistance zones. The strongest breakouts are shown with decreasing volume, decreasing volatility as price consolidates near this level. And as we can see, this place that price consolidated, if you look at the volume, you can see there were a lot of decreasing volume activities at this area. You can see a lot of decreasing volume activities at this area, followed by a breakout that occurred at this area with an increased volume. This is what helps us to know that it is a strong breakout. Now, when the price finally breaks through the identified level, you have to wait for a confirmation before entering your trade. A decisive candle close beyond your breakout region is a good example. So the moment price break out and you see a decisive candle, this is a good way to enter your trade. You can enter the moment you see a decisive candle break. That will be the first step. You can also enter. The second step is to enter when price breaks out and comes back to retest, and this would be the one I prefer. I always prefer to enter when price breaks out and comes back to retest the region, either the support or the resistance region. This is a good example, and price comes to retest and you put your stop loss just above that region, and you see when it came back to retest, it was accompanied by an increased volume. This further strengthens our bias in this selling trade. Now let's look for a buy scenario, and as you can see in this range bound market, let me quickly clear my chart. In this range bound market, when price eventually broke out from the upside, you can decide to enter the moment price breaks out above the region. You put your stop loss just below your recent swing low, or you can wait for price, which I told you I prefer, to come back to retest that level. When price retests that level, this gives you a better risk to reward and higher confirmation that price is going in your direction. Stop loss should be placed just below the recent swing low or your breakout candle. Recent swing low would have been a perfect place for your stop loss placement. Some people decide to put their stop loss just below the recent swing low, just below the breakout candle, to gain a better risk to reward opportunity, but this is a risky approach. Now your take profit should be a minimum of 1:2 or 1:3, as the case may be. You can decide to measure the distance, the length of your consolidation, to help you get a better profit target for your entry. The length of your consolidation, if you frame that and put it in your trade, it will give you a good area to exit your trade. This is how you can exit, or you can aim for your fixed 1 to 2, 1 to 3, 1 to 4, as the case may be. Remember, risk management remains essential with this strategy. Risk management is very essential for this strategy. Never risk more than 1 to 2% of your trading account on a single trade. Remember that not all breakouts will succeed, and having a predefined risk limits and protects your account during inevitable false breakouts. The time frame you choose affects the reliability of your breakouts. Higher time frames such as your daily and weekly time frame typically produce more reliable breakouts with less market noise compared to your lower time frame, which may generate more frequent but less reliable breakout signals. So match your trading time frame selection to your trading style and availability. So if you are a day trader, you can make use of your 1 hour time frame or your 15 minutes time frame. If you are an intraday trader, you can still make use of those time frame. But if you are a swing trader, a positional trader, you can make use of your daily, your 4 hour and your weekly time frame, as the case may be. When executing this strategy, always remember to maintain your discipline by following your predetermined plan. Avoid the temptation to move your stop loss or take profit based on your emotions during the trade. The strength of your simple breakout strategy lies in its objective rules and systematic approach. Alright traders, we have come to the end of this video. Engage with us in the comments below. We want to hear about your experiences. And if you found this video helpful, do not forget to like, share and subscribe. Turn on your notification bell so that you wouldn't miss out on more trading tips and strategy. Thank you for watching, and I will see you in the next video.